What's up, guys? So I'm gonna make this video because obviously it's super important right now. This is going to be life-changing. My timing has been a little bit off. Was expecting all of this. Hopefully you guys listen to my videos. I was telling you guys before all of this crap to, raise your cash levels. And I was telling you guys weeks ago that we entered a risk-off environment based on my models. So hopefully you have a lot of cash like me. There's a reason why I got stopped out of all my crypto as well a month ago or something like that, right? When I was telling you guys that I was forced to take profits, and that's why I have so much cash, and that's why I'm super happy right now. And I wanted to make this video without a script, nothing. I never have a script, but I'm not gonna edit this video neither. Don't have time. Wanted to make a quick video about, you know, what's the fair value of the S&P 500 right now. Peak to trough, we're down, I think, 18% for the S&P 500 in that ballpark. Yeah, about 18%, depending if you're measuring on a linear chart or candlesticks. We were down, yeah, 21% at the lows, right? So that's pretty crazy. The last time the S&P 500 was down this much, this fast, was in 2020 during the COVID crash. So my point is, this is an amazing opportunity. This is life-changing once we rebound and we enter a bull market again, which we will. We're still in a secular bull market. Not going to go in details about that, but basically, when we're in a secular bull market, those are trends that tend to last 20 years. We most likely have another 5 to 6 years left before this secular bull market ends. Hopefully that makes sense. And the point is, we always go back to the highs during a secular bull market. So that's the only thing you gotta understand. So this is why I'm extremely bullish right now. I was extremely bearish since the beginning of this year. I was warning you guys that this year was going to be super tricky, very hard to trade and to just survive the year. Obviously, I was not expecting us to drop that much, even though I warned you guys we could have a 5 to 10% correction at the beginning of the year. And right now, super important to just zoom out, look at bigger picture. And what I mean by that is, first and foremost, I bought the dip. All right, so forgot to say that because I'm not editing this video. So yeah, I wanted to talk about the fair value of the S&P 500, explain why I bought the dip. So I started buying for the first time in months. And the reason why, well, I'm 70% cash, right? And right now, just using logic, statistically speaking, if you bought the dip when the S&P 500 was down about 20% and you just bought it every time, you always made money. All right, so if you're buying right now, in my humble opinion, in 6 to 9 months from now, you're going to be very happy. And most likely, right now you feel like an idiot. I feel like an idiot buying. Not that much though, because obviously I'm using my system, but you never feel good buying when we're in a bear market, which we are, by the way. I told you guys in my last video that my bear market model triggered at the end of the month of March, last month basically. So it triggered like a week ago. Before that, my risk on, risk off model got triggered, telling us to F off because, we were no longer in a bull market. And if you guys remember, I showed you guys the seasonality as well, that the month of April and May should be bullish. And obviously we're tanking, we're going down. So that's another sign that we are no longer in a bull market. Seasonality is a leading indicator when it comes to understanding if we're in a bull market or a bear market. So I digress. The point is, I bought, and I'm going to tell you guys why I bought this morning. A little bit, not too much. I did not pull the bazooka yet. I'm not comfortable right now. I still think we have another 10 to 15% in the broad indexes, full disclosure. And what am I buying? I'm buying the S&P 500, all right? So super simple. The next level, told you guys, it's 455, 450 on the S&P 500. That's when I'm going to start pressing on the bazooka and I'm going to start buying more aggressively. And as you guys can see from where we closed today, that level is about 10% lower. So if you're buying right now the S&P 500, for me, because I'm 70% cash, I have a lot of cash right now. So I'm super happy. And for me, even if we go down another 10%, it's worth for me based on risk reward to start layering back in the market. So hopefully that makes sense. And I'm fully aware we can go down another 10%, and I'm okay with that. For the S&P 500, I'm buying the Nasdaq 100 and the S&P 500. Basically, I'm not taking too much risk. I'm not doing anything with individual names yet. So right now I'm just focused on the indexes. They just have less beta. So if the market pulls more and we continue having, this uncertainty with all the tariffs and global liquidity and whatever people try to use as the narrative of why we're falling, I know that we're close to the bottom right now. And so what is the fair value of the S&P 500? Give me 1 second. Computer is slow today. Everything is slow. When everything crashes, like everything just stops working. It's crazy how your charting software stops working. Like everything just craps the bed. I'm just gonna get rid of some of my indicators because it's just too much noise. I'll take out the cloud trend as well, and the this one. All right, then I'm just going to go into settings. Sorry for that. It's gonna reduce. I don't need that much standard deviation on the monthly time frame. By the way, if you want to have access to some of my indicators, it's free. There's a link down below description if you're interested, if you want to make money. But anyways, so this is the fair value of the S&P 500, guys. On the monthly time frame, it's 542. It's the means right here. It's the blue line right here, the blue label. And right now, as you can see, we basically went to the first standard deviation, which was my target. Told you guys 512 was my first target in that ballpark. We went below 500 actually today to then just snap right back. Crazy day today, by the way. Crazy volatility in the market. Started buying because systematically, I'm also going to show you the DCA smart model triggered a buy signals as well. So that's why I'm nibbling right now. So I'm starting to buy because long term, we're down 20% almost in the S&P 500. So it's going to be a good buy if you're just patient enough, right? So that's how you got to see it right now. And I have too much cash, honestly, where based on risk reward, it's worth it. If you only have 20% cash right now, you're probably stressing and panicking. So that's completely different, not financial advice, just what I'm doing. And yeah, just wanted to show you guys, obviously we could go down another 10%. I'm expecting that, by the way. But you can see, this morning when I bought like in the middle here of that wick, right? So we were already close to that second standard deviation of 472. That's why I started buying. And, the means right now is 7.6% higher from where we closed, all right? So we could go down another 10%, but I'm not worried about that. What's important to understand is you buy here, right, in the green zone that's undervalued, and you sell in the red zone that's overvalued, all right? So that's pretty basic stuff. So right now, this is why if you're buying here, right, especially at the lows of this morning, I mean, the risk reward is very juicy, all right? All right, and then the big reason why I bought today in the indexes, small size, but I'm starting to get back in the market, is because the DCA Smart, which I told you guys was going to be one of my number one tools to start buying the dip, right, in the markets. I give access to it for free, by the way, link down below if you're interested. And right now on aggressive mode, usually I do not buy based on the aggressive style. So you can see you can basically choose which type of investor you are. Basically, usually I leave it at neutral, and it basically just uses the 100 moving average, and aggressive, it uses the 50 moving average. And you can see that it triggered buy signals here, guys. And if I zoom out, you can see it's extremely accurate at buying the dip. All these small arrows, basically, they're all calculated in the label here. And if you had followed this strategy, right, even though the market is down 20% in that ballpark, you would still be up 45% if you had bought the dip every time, right? Then you can click on the moving average and you can move through time. The strategy basically it's going to show you based on when you want to start dollar cost averaging, if that makes sense. And you can see it's spot on at buying the bottom on the S&P 500. So right now, this is why I started buying for my parents in their retirement account. there's 70% cash, like for months, a couple of months now, since the beginning of this year. So this is going to be life changing for their retirement. And right now, systematically, I'm starting to buy because obviously I'm starting to have these buy signal right here. I did not buy on the first green arrow. So this is when you kind of use your brain, right? So you can't just always listen to it, but it's a good system to just take out emotions when you're actually buying the dip, especially right now with all the volatility and uncertainty. You really want to get rid of your emotions. So now I'm going to show you guys what I'm waiting for to push the bazooka button. All right. When I mean bazooka is like I'm putting back in 50% of the cash like same day. So that's like bazooka style for me. Not there yet, but basically I'm waiting for neutral investor style on the weekly time frame. And you can see that we have not triggered yet. And this one is even more accurate, but also rarer. So sometimes, you can wait for this one to give you signals and it never does. And then the market just reverts right back up. So that's why I started buying regardless. And, if my risk is only 10% downside for indexes, I'm perfectly fine with that. And afterwards, I do expect the market to have a huge reversal. Not now, not in the coming weeks, but most likely in the second half of 2025, to enter 2026. Don't forget that bear markets tend to last a couple of months. All right. So this is why I'm not going all in yet, because I'm expecting this to last a little bit longer than some people think. But anyways, just wanted to show you guys what I'm doing, how I'm thinking, why I bought the dip today, all right, based on my system. And then one last thing I will say about the DCA Smart is when you go back in the settings for investor style and you go to conservative, it basically uses the 200 moving average of the weekly time frame. And it's very important because you can see through time that the market always finds a bottom at that level. You can see during the 2022 crash, right, we bottom right on that moving average. COVID, we went a little bit below, but man, when that happens, you go all in. All right, so it works extremely well. And my point is right now, guys, we're so close to it. This is why I bought the dip this morning, because we're so close to that 200 weekly moving average. What's the difference between the lows of this morning? Yeah, like about 5% from the close now, because obviously we went back up. It's about 8-10% from where we are. So I'm still expecting us to touch that level, but bigger picture for retirement account with long-term horizon, not financial advice, but my parents, they don't need that money. So, I can start buying for them systematically. Even though I know that there's a good chance that we go a little bit lower to retest minimum that moving average. But still, right, like based on risk reward, it's getting really good to buy the dip right now. Obviously, I'm just doing indexes for now. I will let you guys know once I migrate into single stocks. I already showed you guys in one of my videos how to buy the FN dip, how to get back in risk on type of assets once the model starts telling us we're back in a risk on period. So hopefully that makes sense. So just want to clarify, yes, I'm buying the dip. Good time to buy the dip, but do not expect us to go right back up to the all-time highs in the next coming weeks. Expect to be very happy in 6 to 9 months. And just don't forget, we're still in a risk-off environment. My bear market model got triggered at the end of the month of March, so it's been a week. And so right now, you gotta understand you're buying the dip, but you're going against the trend, and that's okay if you understand the fair value of the S&P 500 and you understand these specific levels I just showed, and you can start seeing why I'm now buying a little bit, right? So I'm still expecting a little bit more pain eventually, but right now we could finally have that rip your face rally on the short term to then go right back down into lower lows. So hopefully that helps, guys. Hopefully this video was short, 15 minutes, not that bad. So I'm out of here. Don't forget, if you want to have access to this indicator, it's completely free. You just gotta Give me your TradingView username. So you need to open an account with TradingView. I would recommend doing the free version. So open the free account, it's completely free. You don't need to pay for their subscription. And then, yeah, you just give me your username, TradingView username, and your email address to make sure you're a real person. And yeah, I'll give you guys access to this indicator. It's spot on. And right now I think we're kind of here. We could have a big rally, go back down, but the speed of this move is astonishing. Like, I am surprised how fast we went down. Even that, on that note, I'm not gonna pretend like I saw that one coming. That was pretty hard to time, and that's why you gotta have good models that give you warning signs in advance so you can get out. So that's why I make these videos, to log myself and to try to help others. Hopefully it helped you. Hopefully it makes sense and you see value. So catch you in the next video. Right now, especially in the next coming days, if we go back down again, not a bad time to start, nibbling a little bit long term. If you're trying to swing, like day trade or whatever, that's right now, this is not the environment where you do that. And I stick with indexes for now for a reason, because I don't know if this bear market is going to last another 2-3 months or another 6 months. I have no idea. So this is why I'm buying the S&P 500, NASDAQ 100, and yeah, it's pretty much it. Keep it simple. Don't blow up your account. Don't use margin. I'm expecting us to probably trade like in mud for a little while until everything gets sorted out. So just be patient. And yeah, especially if you have a lot of cash right now, you're going to be very happy in 6 to 9 months. All right, catch you next video. God bless you, and stay blessed.